All right, good evening and welcome everyone to Real Estate Accredited, a networking and educational platform where we just talk about real estate and how to invest both passively and actively in real estate. I am your co-host, Jeff Rodriguez, joined by my co-host, Philip Shuligan and Rajiv Menon. Philip and I are co-founders of Boost Capital Group, and where we focus on helping busy professionals invest passively in alternative assets such as real estate. Real Estate Accredited is an educational platform and focus on networking and helping people out in achieving real estate investing. Today, we're going to go over a topic of discussion today is
our topic of the day is how to analyze markets for potential investment.
All right. So if you want to go ahead and kick it off, we'll let people as they show up in, and this is being recorded, so anybody that wants it afterwards, we can send it.
All right. Okay, yeah, let's kick off the education part. Feel free to post any question in the chat. Otherwise, since we are a relatively smaller group, you can also just unmute yourself and ask a question if you want. But otherwise, please keep your microphone muted so to avoid any background noise. We appreciate it. So as mentioned, topic of the day is how to analyze markets for potential investment. And I think there are two things to really look at when you're selecting a market is really like the market level, which is also called the metropolitan statistical area in real estate a lot, or MSA. And from that standpoint, you're going to look at 6 things: the market itself and the location of the market. And I think that from a big picture standpoint, is it in a state that is growing, its economy is growing, or the region is doing well? Is it a region that is attractive for investors in general and rather for tenants, because we're looking at this from the angle of the multifamily standpoint. So second topic to look at would be the population size and growth. And here I marked this with a little asterisk there, meaning that it's a tangible information, and we'll go a little bit deeper about that a little bit later on. You want to select wisely, I would say, your market size and make sure that there is population growth. We like to look at markets of 500,000 people or more. When you go lower, you face issues with finding property management companies. And also in the very small markets, I always say you want to become the mayor of the city. It could be very nice, but especially when you're starting, it's taking a chance.
I have a quick question. Yep. When you say location, say you have the Birmingham market here. I know Birmingham because I've stayed there for some time. So it's an urban city, but if you look at the surrounding greater Birmingham area, that's where many of the people who stay and they come into Birmingham to work. Is it a good idea to look at only Birmingham, or is it a good idea to look at the outlying area?
Yeah, that's a good question to differentiate indeed the what we're talking about. And that's why when I mentioned the MSA, the market statistical area, the suburbs of Birmingham would be included in the MSA.
Okay.
So when you look at the population, and I think it's understood that people will go to work maybe like to the city and live maybe in the suburbs, but that's understood. So yes, from that standpoint, when we look at the market, you're looking at the market itself and the suburbs. And it's like here in Atlanta, I'm technically 15 miles from Atlanta proper, but still it's considered part of the market statistical area, metropolitan. Yeah. Yes, thank you. To come back to our bullet points here, the next one is the employment. It's about employment trend. And here, I think the idea is to make sure that there are in the news announcements of jobs created. It's not, I know there are some people who are looking at that very closely. I think the employment is really very strongly linked to the population. I think if you just look at the population, in my opinion, that's enough. Next, you want to look at key employers and industries. And here the idea is you just want to make sure that you have diverse industries and diverse employers. You don't want to be in a situation of Detroit when the automobile facilities started to shut down 20, 30 years ago. Obviously, that city was very much impacted. And I know recently we are looking at a deal north of Georgia, and the broker mentioned, say, oh, it's the capital of the world of carpeting. They're producing carpet. And sure enough, it was a smaller market, and they had multiple employers, but everybody was doing carpet. So the day carpet is not in fashion anymore, I'm not sure it's a good idea to be in that market. And that's why actually we decided not to pursue the deal there.
Do you say the percentage of recession-resistant employers in an area too? Because if they are involved in essential services, even if it is a down market or they are required, and that may help with employment.
Indeed, it's a good point. And certainly when, for instance, Las Vegas and Orlando, when COVID hit, were more impacted because more traditionally linked to leisure, vacation places, and so on. Though, yeah, it's, I think, something to consider and see how, I think I would take a look at how these markets, how much they were impacted in the past through these type of events.
Okay.
That's a good point. Also, yeah, and I kind of, it's linked to what I was mentioning about the employment trend. Is there anybody who is building any facilities, moving their headquarters, or that kind of change? I know there are a lot of cities throughout the South that benefited there was the move of Tesla headquarters at some point and other high-tech industries in Texas particularly, but there were also some in Georgia. Always good wherever these larger companies are moving. It's an indication that especially they studied the market very thoroughly before to make that move. So they define that there are good reasons for them to move. And from that standpoint, larger companies making such changes, it's going to be followed by other companies. All right. And the last thing that you can look at, and that's something it's good because here I'm sharing some slides of past deals, past presentations that we had. You want to look for accolades in any news sources that, here I counted earlier, you have 12 different accolades for the city of Atlanta. It was for a past deal. So you see, the more, I don't know if you need 12 necessarily. I would go with 2 or 3. But it's always good to see that a particular market you're investing in receives such accolades. All right. So next, we will talk a little bit about the sub-market. Right. And again, I use the same thing, anything with a little asterisk. That's something that is quantifiable and you can find data about it. We'll go over some of those in a few minutes. But from a sub-market standpoint, you also want to look at the key employers, what type of jobs, depending if you do class A, B, or C in multifamily. So meaning like the higher, more recent, more expensive properties versus which are more for, let's say, white collar jobs, and versus class C that is more blue collar type of job. So you want to buy a class C property where most of the jobs around it are white collar, for instance, right? You want to be in tune with the market. Also, look at the key businesses, attractions, and stores. Again, if you're into higher end class A type of properties, you like to see the Starbucks, there's one here, the Whole Foods type of supermarket, etc. Also, you can look at the school ratings. If you want like higher end, you're going to look for better school ratings. You can find those easily. If you use Zillow and you click any house in the area, you'll see the school ratings is very easy, or any other real estate website for that matter. Median household income That's a little more tricky. I'll go over to find, especially like recent information, but I'll share some resources later. And also something we like to look at, and it's almost a second, more deeper analysis. You want to look at the cost to own versus the cost to rent. And I think these days with the interest rates being where they are, it's twice as expensive to own a house with a mortgage than to rent. Any question? Put them in the chat. Otherwise, I'll move on.
So I had one question. So there's a recent trend of remote work, and if your employer need not be close to you, so then how do you analyze or take that into factor if you're looking at, say, white collar jobs or in an area where more remote work exists?
Yeah,
you know,
I was very much of that. I think especially like at the end of COVID, I was convinced there was a long-term trend on that. And there was certainly a trend.
Mm-hmm.
But at the same time, there were many companies who came back and said, now it's time to go back to the office. I think in general, there's probably, yes, there is something of that nature. But at the same time, I believe if you want to have access to attractions, stores, you name it, you're going still to be, at least like we discussed earlier, in the metropolitan statistical area, so in the larger market. So downtown may have been impacted by that in some cases. At the same time, there are many downtowns in many cities that are being revitalized. Getting better and attracting, especially younger generations, people who are, some people, they don't want to drive a car, they want to move around. I've not seen a huge impact, quite frankly.
If you can get accurate measures of median household income in an area, you probably get an idea of what kind of work or how much they're earning. So
I would say so, yeah. Absolutely. But yeah, it takes kind of there are many factors from that standpoint. And we'll touch on that topic in a second. Yeah, let's talk, maybe we'll cover the questions later. I think Paula put some long comment. We'll get to it later on. So population. So yeah, population is pretty simple. You can go on the census.gov website and download the data. Actually, I do have this little screenshot in green here. It's part of a spreadsheet. I downloaded data and I consolidated over, I don't know how many years. I've at least 12, if not 20 years. I have 12 years. Yeah. So that's where when I look at a market, I would look at 10-year change. I focus more on the 5-year and then take a look at the 1 year as well. Like 10-year is, if everything is positive, obviously it's a good sign. The larger the market, in this case it's Houston, the less percent increase per year you're looking for. So here we're at 1.28% per year over 5 years, and everything is in the same range, whether it's for 10 years, 5 years, or 1 year. But really, if you're looking at the smaller market, you're looking for something that is a little bit stronger, just to make sure that there is a trend. It's a more significant trend. I think if anybody is interested by the Excel sheet that I put together, I put a note or maybe your contact information, about 416 markets. If you want all the data, I can share that with you. But so certainly there's something to look at. And that's for us, the number one. When we look at the markets, it's the number one thing that we look at. And actually, we're looking at both the size and we're looking also at the growth, and the growth meeting those criteria. I will share more about our specific criteria in a minute. Analyze crime and income, and that's income part 1. Unfortunately, those are not perfect resources, and there's no perfect resource with updated and very recent data available out there, at least for free. But I like city data, and that's an example on the left. It's a little bit harder sometimes to put colors here. It's income about Houston. But I like best neighborhood and crime grade. Those are like the screenshots that apparently made by the same people because they're using the same map. So it's very clear what's A, what's F. This is the crime map. You can see overall crimes, property crime, violent crime. You can fine tune whatever you want to see. A, the green is very good. F in red is pretty bad.
Is there a particular type of crime you look at, or is it just a whole?
No, it's any crime.
Okay.
And here, like on the same principle, you can have a map with best neighborhoods. I don't know based on what, but then you have a map on income, but it's the same grade, A to F, politics, rent price, internet, interestingly enough. But I think these maps, they look pretty much the same. Actually, I can move this around and you'll see it's very similar. They're both for Houston, different scale though. It's good because it's free, it's easy to use. And I think even if the data are a little bit older, you're not going to have a huge change in crime or income from one year to the next. So I think it's valuable. Regarding income, I like to have much more up-to-date data. And for that, I would usually use a CoStar report. So CoStar is a company with working in commercial real estate and they're doing a lot of things, but they are particularly doing analytics about real estate, commercial real estate. And if you ask your broker, in that case, it was somebody with GRIA here in Atlanta, and I asked them for a report. It was for a property south of Augusta, Georgia. And here, one of the many pages on these reports, you have the income at a 1 mile, 3 mile, and 5 mile. And you see it's more or less 43,000, 44, 43. So usually it's more or less in line.
Philip, I think there was a comment here. What is GRIA?
What is GRIA? GRIA there are brokers here, particularly in Atlanta. So I was in touch with one of them. I don't know what it stands for really, but that's their company.
So this slide right here helps answer the question that Paula placed in regards to conflicting reports of the Austin job market. She's saying that there's continuous growth due to Samsung, Tesla. Pretty much it boils down to keeping your eyes on the specific market you're interested in, looking at the macroeconomics of your market of interest. So yeah, there's reports that can just be misleading, but reports like CoStar, Marcus and Millichap, they do a lot of analytical reports on specific markets. So just be mindful of who your report is coming from, because there's been rumors of reports being put out so investors do not invest in those areas, therefore lowering the cost of those areas, and a big company comes in and scoops up a lot of real estate. Be mindful of who those reports are coming from, but always focus on the data. The data doesn't lie.
Yeah, that's why. The prior page, those are free data, so it's useful. We use it. This is more reliable information. They use like data sources and so on. And as I see Paula is talking about, the job market. That's why, like the job market, I'm very cautious with the news, because sometimes they will announce things that are not happening. I think especially like one example is near Conyers here in Georgia. There's supposed to be a Rivian factory. They announced, we're going to get thousands of jobs and so on. That was 2 years ago. They didn't break ground. So I'd rather look at the population and using like census. They're tracking who is moving in. Then the job announcements, they're good. When I see, for instance, in the case of Rivian, I was not familiar with that company. And sure enough, so like the broker in that case was pitching me, say, yeah, you should, it's a great place and this and that, like they're building a factory. And when I researched this news, that's where they were saying they have an issue with the county. They were brought to court by whomever because they were expecting some financial help and they're not going to get it. So now, like the whole thing is in jeopardy. And like I said, sure enough, 2 years later, it's still, they didn't break ground. All right, we're almost done there. Yeah, that's a little bit of a bonus because I think I would say I would qualify those as being like second, like a deeper analysis on or factors to take into account: the market rents and the vacancy forecast. And again, in the CoStar report, and that is something usually I ask the broker who is selling the deal to provide a CoStar report, or we can also buy a subscription. It's pretty expensive, but usually the broker who is working on the deal will provide that to you. And what's interesting is that they have economists in their team, and they are giving you a forecast and where they think rents, for instance, here in Augusta, in this example, are going to go over the next few years. It's interesting because in Atlanta, I think they're looking at kind of negative or 0% growth over the next few years. And in Augusta, it's still growing. And actually, I believe there's some military facilities being implemented there, or it's pretty vibrant market, and also the capital of the world of golf cart. But that's not a single industry location. Here, on the same idea, when you do your underwriting, you want to have an idea of where the rents will be, but you also want to have an idea of where vacancy will be. And so here,
Paul was asking what happened in August 21 that the rents went so down. I think it's COVID related, right?
COVID was there. I don't know what happened there in the market. So down. Oh, here. No, they didn't go down. They didn't go down the rent. Okay, I misunderstood. This is vacancy, right? This is the rent. They didn't. So here, the orange bars is the market rent growth year over year.
Okay.
So it grew, and that's the percent on the right side. So it grew quite a bit. Like year over year, it was at 10% plus. And then it went lower to the 1% year over year, mid this year, actually.
So if it stays the same, the year over year growth will be low.
Yeah. Even like anything. So here, yeah, that was an effect everywhere in the country. You had, or at least in many places. So throughout 2021, rents exploded. You were in double-digit territory for some time. And then it cooled down. So it was like a kind of a fluke to some extent. So it cooled down. In some markets, it went to negative. It went to negative. All right. I will.
We are at 7:30. So
yeah. Okay. Yeah. Finally, here in the last slide, we wanted to share our own criteria. That is, we try to keep them simple. So we're looking at 500,000 people or plus. Population growing with the 0.5% plus, I think, whatever. What did we say for? No. Yeah, I guess, again, it depends on the size. So if it's 500,000, it would be 1.25. And then the bigger the size, the less the year over year needs to be.
Yeah.
Diverse employers, diverse industries. And we're also looking at lower crime to the sub-market. Those are our 4 criteria.
And do you focus on B-class neighborhoods, or is there a specific class of neighborhood you focus on?
No, not particularly. I think it's just a matter of crime. Sometimes it could be a solid class C. As long as crime is not high, we would certainly take a look. For sure.
So Paul is asking you check for level of crime in the downtown proper. Why just submarkets?
Yeah, so for again, I like to use crime grade. You can use city data.
Yeah. So my personal opinion is, if you look at a market like outside of Chicago, the crime may be high in Chicago, but the suburbs are pretty safe. So there's no reflection of the crime in the suburbs.
You want to focus on the entire market, but you got to focus more specifically on that sub market, because you're always gonna have pockets. You're gonna have higher income in certain pockets of the city. So you want to focus on where you are going to be investing in.
Are we focusing investing solely on the sub market? A sub market, if you look here at Houston, any neighborhood, if you will, it is a sub market. In that case, from a crime standpoint, I would certainly avoid anything in red, the deep red for sure. I would certainly consider something in, I think, and above is okay. So you have some pockets here, but after it's going to be case by case, right? After a while, you're going to know maybe that there are some, maybe I would say, just if you look at the inner area here of Houston, maybe I would probably want to avoid anything that is east and stuck to the west side. But again, after sometimes it's not, sorry. You still have to check with people who are, if you're familiar with the market, you have a leg up on this, and talk to brokers, real estate agents and whatnot, who can tell you a little more about the neighborhoods. Usually they are very knowledgeable about what's going on in their city. And after that, I would say maybe I want to focus west of this inner loop here in general, and maybe this pocket and those pockets. But again, C, I think I'm fine with C. Anything like.
Also consider the path of progress. There's some things that you call the city, find out what intent the city has, what capital infusion they're going to put in certain areas. So they could be a really rough area, but there might be city plans that they're going to put a lot of money into that area. Path of progress, it might be red or yellow at that moment, but you might be able to get ahead of the game if you're focused in that specific market and something that others don't. That's why it's really important to have boots on the ground and have intimate information about markets. All right. I would. Okay.
Jeff,
All right,
at 7:35.
Okay, so if that's the last slide.
Yep, it is. Yeah. It was.
Okay. So I'd like to let everyone go into a breakout room real quick, network, get to know each other, and ask any questions. Drop questions. We're here for another 20 minutes. Thank you, everybody, for joining us. We look forward to seeing you guys next week. And if you know somebody that could benefit from joining this meetup, please share it with them. We thank you for taking your time and being with us this evening.
Thank you.
Thank you, everyone.
All right. Thank you.
Bye.
Bye-bye.
Bye.